guys about hiring a new employee and or retaining the employees that you had during the COVID year of 2020. And we'll talk about three things that will affect that, that will benefit you as an employer this year. And so those three things that we're going to talk about right now is the new employee retention credit that the employer is eligible for. And we'll talk about how the payroll taxes are affected and how you take that credit. And then the third item on this list today, guys, we're going to talk about the expense deduction that will help your bottom line and keep more money in your business, more money in your pocket, which is what this whole thing is about, right? You want to make money and you want to make sure that you keep as much as possible. And you want to make sure, of course, you take advantage of all the credits out there, right? So let's start off now with the new employee credit, the new employee retention credit. Guys, if you had anyone in your payroll in 2020, anyone from January the 10th to December 31st, 2020, anybody that was on your payroll, now it could be one person or it could be any number of people, but anyone that's on your payroll, guys, there is the new employee retention credit that you can get from the IRS. And the good news is that credit is up to $5,000 of, so it's 50% of any wage that you pay to an employee of $10,000 maximum, 50% of that. And this is for each employee. Okay, so this is a huge credit. This is a huge credit. So if you hire even one person in your business, and again, I wanted to emphasize that when we're speaking of business, guys, keep in mind, it's not just the incorporated businesses. It's not just the LLC. It's not just the corporation, the S Corp. If you are self-employed people have payroll too. If you are self-employed and running a personal business, a sole proprietor business, you can hire an employee and all these benefits apply to you as well. Okay, so it's not just the corporations. All right, so keep that in mind. So up to $10,000 per employee, you are eligible for 50% of that, which is $5,000 in new employee retention credit, right? Now, the other good news about that is that if you have gotten a PPP loan, now remember, the PPP loan was given to the businesses to keep employee on, to make sure you can pay them. So if your business was affected by COVID, and even if you were closed down or partially closed or closed down because there was a lot of restrictions in 2020 for a lot of businesses, especially here in California. So if you were partially closed or closed and you got the PPP loan to try to retain your personnel and pay them, those wages are eligible. Okay, so it didn't matter if you got a PPP loan, those wages are eligible for this credit as well. All right. So, hey, hi, everybody. Dre, thanks for jumping on here. Oh, God, I want to thank you guys for jumping on. So, yes, how you doing? Andy, thanks for jumping on here too today. Thank you. So anyway, so whether you have one person on your payroll or whether you have a number of people in your payroll, guys, the new employee retention credit, $5,000. And that's my first point that I want to make today. All right. So the second point is the payroll taxes. And we'll talk about how you get this credit, right? So if you're going to have an employee and you're eligible for this employee retention credit, guys, the way you take this credit, there's a couple of ways you can take the credit. So the payroll taxes that you have to pay against those employees that you have to, there's the employee withholding, and then of course there's the employer payroll taxes that they got to pay in themselves. So the payroll taxes on this credit, you are able to take that $5,000 per employee. You're able to deduct the credit from the taxes that has to be paid into the government. So the best way to do this, of course, is when you file the payroll tax returns, which is something that is filed every quarter. Every quarter you have to file payroll taxes. So if you have payroll taxes to be filed, and for those of you who haven't filed the fourth quarter payroll taxes yet, which is due deadline on Friday, you have this credit coming. You don't have to pay all those taxes. You can go ahead and offset those taxes with this credit, guys. You don't have to send this money in and try to get it back. You can offset the payroll taxes that you have to pay for, let's say, your fourth quarter of 2020, which is a part of the eligibility period. So, I'm glad we're having this discussion today because we haven't sent those taxes in. You can take this credit against those payroll taxes, offset your fourth quarter, and then just pay the difference to the federal government and you'll be just fine. All right. So I'm glad we're having this conversation today because tomorrow is the deadline for fourth quarter taxes. So, all right. So you can deduct the money is the credit from the quarterly tax returns, and or if it's paid in, you have to fill out a form to ask for a credit of that money back. Okay, you have to ask for a credit of that money back. You have to fill out a form and send it into the government and say, hey, you know, I'm eligible for the employee retention credit, so I need to get that money back. So you fill out this form, send it in, and you can get a check mailed back to you for the retention credit, right? So you didn't lose it, you can get the money back. All right, so so that's my second point today. Again, I want to thank you guys for jumping on. All right, Elaine Proby here, CEO of PROBY'S Tax and Accounting. Thank you guys for popping in. And so the third point today I want to cover is the salary expense deduction. So now you've paid payroll. For instance, you paid someone $10,000 in payroll. Again, self-employed corporation, $10,000 paid out in payroll. You have $5,000 employee retention credit, so that credit comes back to offset your payroll taxes. As far as your deduction is concerned, guys, you can deduct your salary, the salary that you paid, from your revenue, from your gross revenue. So you get a deduction for that salary, even though you're getting this credit back, but you still get to write off the total salary that you paid out as a deduction. So this is great. So, I mean, you know, so you're getting on both ends. You're getting credit for having the employee that you retain, and you get to write off the full salary as a deduction against your income. And that will reduce your taxable income, which means that you pay in less taxes. This is a whole key. The key is take advantage of all your credits, pay less taxes in, right? So you have more money at the end. This is how you're going to build wealth. This is how you're going to, you know, increase your cash flow and be able to reinvest that money into your business and help your business to grow, to make more money, right? This is building wealth. This is what we're talking about here. Save on taxes and take advantage of the credits and increase your bottom line so you can build wealth. This is what we want to emphasize. All right. So let me recap the 3 points today, guys. We're talking about if you hired a new employee or you retain the employees that you had during COVID, whether you was partially closed, and even if you got a PPP loan, it didn't matter to help you with your payroll. If you paid up to $10,000 max, and you didn't have to pay $10,000. If you paid them $8,000, you can get 50% of the $8,000. So if you had even one employee as a self-employed, you can take 50% off what you paid out as a qualified salary to go ahead and take that retention credit. And if you haven't filed your fourth quarter, you can take the credit against the payroll taxes you got to pay into the government before that's due, and it's the end of the month. So, right, so we can still go ahead and take that off. So that's my first point. The second point, again, is the payroll taxes. And that's what I was saying. You can offset the taxes that had to be paid in with the credit for each one of your employees. And you don't have to send that money in. But if you do, you can file a form. I think the form is what, $7,200, and that will give you your payroll taxes back. Okay, you'll get a credit, you'll get a check in the mail. The IRS will refund you that money back. All right. So that's the second point. The third point, guys, is you get to deduct the salary that you paid out, the employer taxes, anything associated with that payroll, all of those expenses. You get to deduct that off of your gross revenue. So your bottom line, your net profit is going to be more money in your pocket, more money to reinvest in your business. And this is how you can continue to build wealth, by saving on your bottom line and increase your cash flow. All right. So this is great news. And this is what we want to do. Take advantage, again, like I said, of all of the deductions, all of the credits, and increase our bottom line. All right. So good. So thank you, guys. Hi, Inez. Thanks for jumping on. Laverne Smith, thank you for jumping in. All right, Lee Smith. Thank you guys for jumping on here today. Those are my 3 points, and hiring an employee. And I wanted to encourage you guys to, just start listening to instructions. You guys stay up so we can keep these businesses going, so business can continue to grow, so we can continue to get out of this COVID, get to the other side, be very successful, maintain our businesses as we have. And the key here is make sure that you do your accounting, file your taxes, take advantage of all your credit, and increase your cash flow. And so you can build wealth, right? So with that said, guys, I will be out of here. Any questions? Let's see. There's a question over here. What if I want to? Let's see. I'm not able to see this question. As an independent contractor, let's see. I mean, it looks like what about an independent contractor and not an employee, rather than an employee? So this credit is only for employees. You have to have them on payroll. So if anyone is an independent contractor, guys, they're not qualified for this credit. You have to be an employee. They have to be in payroll, okay? And hi, Roy Turner, thanks for jumping on. So if that's, yeah, so independent contractor is not qualified for the credit. It's employees. So they have to be in payroll. You have to be deducting payroll taxes, and you have to be filing payroll taxes to be able to take that credit off of the monies that you paid into the government, right? Any other question, you guys? If not, put your questions below. If you guys have any particular topic that you want us to discuss on here, make a note of it on here on the slide. We'll come back through here and check it out. And then, if there's anything in particular that you want to discuss, we'll be glad to discuss it with you. So make comments below, share this video. Okay. So with that said, I will be out of here. I want to thank you guys for jumping in, and I want you guys to take care of yourself, take care of each other, and I will see y'all back here next week. All right. Have a wonderful day. Thanks for joining in.